Hello investors and traders, today I'll speak about the stock market, technical and fundamental analysis about S&P 500. So let's start with the main US index S&P 500. Here in my mind here the impulse finished. Look, it was as I told you previously, the first, the second, the third, the fourth triangle and the fifth. Now we are in correctional wave. Here I'm expecting ABC move, and here the finishing of wave E. So here I'm expecting to see the index itself a little bit lower. I'm expecting to see here the fifth wave. So in this case we may see the index another 15% down. It's my view, it's my opinion. So the Nasdaq, the IT companies index. So here look, we have here three major support levels. I think here can be a nice level to see the stock market is about 97.58. In this case there is a potential to see the stocks about 20% lower. So let's have a look at a few charts. So why I'm expecting to see the stocks, the S&P 500 index lower. Look, here we see that the P ratio, forward P ratio for average 10-year is about 17. Now a little bit higher, and also the pandemic overshot. Here it started the stimulus and the record low rates. Here, by the way, the Fed started its hiking, and we see that the P ratio is decreased. So generally speaking, good points. It was the ending of 2018, and of course the coronavirus. It was a PE ratio about 14, about 13. Now it's 17, so it's really it's above the average P ratio. So that's one of the reasons why I'm telling that the stock market, especially the Nasdaq, now is especially expensive. One of the reasons why we have such period of interest rate hiking. Of course, the inflation. Here we see the inflation in France about more than 7%, and in Spain also more than 6%. By the way, 7% inflation, I guess it year-to-year data, so it's the highest record inflation for the last 5 years. So really the Eurozone now is in trouble. The inflation in this area is really very high. So it can be the second reason why I'm telling you that now it's very dangerous to buy growth stocks. And let's have a look on this chart, a snapshot. So we see that the US housing market hit with the biggest 6 months wipe out since 2008, and the total value of US homes declined by 2.3 trillion bucks in 2022. So the change in volume value, it's for the first time became such significant, and we see that the decreasement is more than 2 trillion bucks. And the last time it was the house increases of the housing bubble. So it also red flag that the US housing market is very dangerous now. Maybe we are in a bubble there. Anyway, the mortgage rates in the US for the 30-year mortgage is about 6-7%. So also it's I guess it's a lot. So the demand for new houses is now declining. I think not so many people can let themselves to get a mortgage with such high rates. Going forward to the oil price, the Brent. Look, here I'm expecting to see the fifth wave. Now I think the correction somewhere here is finished, and then I'm expecting to see another move in the fifth wave. In this case, we may see the stock, the Brent oil price higher than 120. So in this case, there is a potential to grow at least 50%. I don't know what will be at the event, but it's just my technical view for the oil price. The B2C, the Bitcoin, as I told you previously, my target is 30,000. Quite nice performance of the B2C since the beginning of the year. More than this asset is up more than 40%. And here very classical waves. We see the impulse, it was the first, the second, the third, the fourth, and the fifth. Then a correctional ABC move, and now we may trying to get to this resistance level of 30,000. By the way, here it was a major support level for last 2 years, so we'll see. But the potential to grow here is about 25%. The DXY, the US dollar currency index, we see 104. So here I'm expecting to see the US dollar to become weaker and weaker towards the end of this year, of the next year, and I'm expecting to see the DXY little bit lower than 100. I think maybe in 1 quarter or 2 quarters we may the Fed finish it interest rate hiking, and then it's my opinion, of course, we may see the US currency weaker and weaker. Of course, it's not 100 probability. It's just my point of view. And of course, the US Treasury rate bond, now the yield is about 4%. The Fed fund rate is 4.75%. We see that last 15 years we traded in a decreasing channel. Now we get out from this channel, and actually of course the inverted yield curve, the 2-year is 4.6% if I'm not mistaken, 4.8%, and the 10-year 4% inverted yield curve. It's of course the first and the main red flag for recession. It's another issue, another problem for the stock market to grow. So generally speaking, the high interest rate, inflation, and high PE valuation of the stocks, of the US stocks, the main reasons why now I'm not heavily buying stocks. I prefer buying bonds, the TLT, the ETF on US Treasury bond, and of course the old dividend kings, dividend stocks like Philip Morris, NTT, WBA. The stocks are the core portion in my portfolio investment. So if you like this video, of course don't forget to press the like button. I have a lot of videos about dividends, about stock market analysis, about fundamental analysis. So subscribe to my channel, and see you on the next time. Bye.